Hey guys, this is Julie. Good morning. I'm going to do a chart review and look at some path for success with Earn2Trade. So we'll talk about that also in this video. So here is the spike futures. This is on the quick strike platform, and the spike represents the interest rate as a futures contract. So it's basically the VIX on futures, and they're showing an 18 vol for October, November, and we're right there. We're almost to the top of that 18. So a little bit over 18, but we're sort of sitting on peak volatility right now. And then once we get past November, going into December and January, February, it's going to rise and flatten out. So we might have a bit of a, end of year up rally and roll over. You can go long ball long, so we'll see if they can turn this around soon with the ball turning around. Then that burst of volatility might, you never know, lead to um, an opportunity to continue breaking out to new highs. I don't know what they're going to do, but right now I know that we're at the 7 and 9 day three. And as you can see, going past the past year, it's really only broken out one time. Got a little bit over its skis here, but came right back in. But March was the only time it disrespected this. So I'm thinking we're looking at peak vol, especially considering that they have 18 as the target for November, right? October, November. So we're there. So, as much as I hate to see this, it could turn around and come back down. Much more room to the downside on the spread. Otherwise, this spread breaks and the volatility really, really, really picks up. And this would be more demonstrative that they've lost control of the market. I don't think we're there yet at all. I mean, we still have a lot of order and control in this, and they really did put the brake on this upper volatility. So very controlled descent over the last few days in the market. So here was your intraday time picture of it last week. You can see that from the daily, the white ones, the middle of that, where it opened from the daily one to the three, from the mean to the three, carried out one time. We had that nice vol excursion outside the three. So that was rare, right? We haven't seen any outside three excursions in a long time. It'll get to the three and then bounce back. And that's normally what you expect from volatility. Reacts, at the ones, twos, and threes. But we did get, a little bit of outside vol. And we weren't able to replicate that at all. In fact, we never really got past the open again. We actually went down below the three, went to the first fib, and came back up. So we'll see what happens if there's certain levels that I look for to see if we're going to get that break and test that 18 and then come back down. That could happen. But more likely, we'll just have to see which way it breaks Sunday. We do have this upward momentum, but anything is possible. You get a new week. We need to look at the monthly spread uh, for this, and let's go ahead and put those lines back on the chart. And I'll put the monthly up. There's the 21 day. Here's the 30-day open. Okay. All right. So let me just put a regular 30-day on there. Okay. So here's the one at 1977 right there. And if we do get a breakout of this 18, that little pop and drop likely would not go any further than 1977 at this point. There are other levels that I look at. When you subscribe, I can get you those templates and help you construct your own um, view of where we are in the volatility complex. But having a template, really, really, really helps put the pieces together of where, the volatility might be going. And as you see, we have a little situation here where the normal spreads normally block price, and we'll see if we turn around or break it up to the 1977 next week. Going down, we ended the week on the low, and the daily one, they bought it, came right in. I think the daily low was, oh come on, 43.57.25, and 43.56.75 was the daily one. So yeah, they tagged my daily one and then popped it up off of that. So the lower one came into play. These moves are so measured. I always like, going from the mean to the three and then extend it out. And that's usually a good target to trade too if they're going to be breaking that tail one time. Okay, here's the Globex. This Globex distribution is amazing. Get a lot of good levels to trade off of. But going into our individual volatility levels, these show the template for that day, for that time period, and its own distribution. Usually very low volatility in the morning, so you stay inside the ones. The traders start coming out and expanding that range. Uh, that first hour of trading, you can see that the range expands. And once you get the direction right, then that allows you to come in on each bar in that range and try to capture a percentage of that range as a profit without your stop getting hit. So where you place your trade inside there, you can duck your trade anywhere in it once you understand the range and how to position yourself inside that range. So using these tools gives you almost like a cipher, so you can take the full distance and then have a system, a process that you can come in and achieve portions of that range on a consistent basis. So if the volatility's medium, you can go to the middle of the range or the 68% and try to capture those points. Or you can go for the lower hanging fruit per trade and see that these little bars are the low hanging fruit. And then when you get the higher volatility crush, you can know that that is the distance that you want to be trading to per um, time frame. So 15 points right there. Look at that. Almost got it. Got it up. Got it on the open of the next bar. And then you got it on the next bar too. So those first two hourly bars reached your 68% of the range. And then it went down to your little 750 range right there. And so here we go. On each low going up, there would be your target. If you don't hit it, that bar, just leave the trade open and it can hit it the second bar until stopped out. So just using, the actual volatility, and it changes per hour. So you can see this was 15 points. This next one was 1375. So the volatility in the morning got smaller, 925 points. Volatility just started crushing itself. And then it went back up in the afternoon. And I pointed that out in the tweet sessions that the range was expanding in the afternoon. And it did before flattening out. They flattened it out because we were at support resistance. So have a plan, have a process, um, have in mind what the opportunity could be for that time period. If you're trading the NQ, here's 71 points between 8 and 9 a.m. Um, if you have medium volatility, you want to be able to hit the side of the barn. So here's your 71 points right there. Target reached. This one, target reached. This one, target reached. Here it rolled over. Target reached. And it looks like this one got hit the second bar. And so, and you didn't get stopped out. So it did hold. It just tested it really good. So that was at at support also. So that higher time frame support is so important because when we get into these larger areas of support resistance, they are walls. That's what pins are, pinbergs. So you have to be cognizant of where those pins are because your algo could literally sit there and try to turn around and hit it multiple times, and that's how you end up churning your account out of money. Um, no, have a plan to trade support resistance as well as, you know, an intraday algo. Um, Distinguish between are you in a trending state or a flat market state, and range contracting in the highest um, time period of volatility is not a good sign. I pointed that out. Usually, this is where it expands, and the expansion didn't happen until the afternoon. Well, it expanded a little bit in the morning, but it contracted really fast. 10:30 to 11:30, 11:30 to 12:30, 10:50, 9:25. Yeah, so it really contracted. that mid-morning period. So it's like threw the brakes on. That's so interesting how that works. Okay, guys, that's all I have for you right now. Sign up. I'm going to be doing these morning videos to help us get started in the day. If you have not had funding, definitely come over to my website, Trading Strategies. Come over to the Earn2Trade tab and check out um, their two plans to get a funded account, the Gauntlet Mini and or the Trader Career Path. Um, Choose a plan. Try not to hit the drawdown, the loss limit. Follow the and do follow the progression ladder, and always maintain consistency. Um, and realize that it's 15 days. So yes, we can always hit the maximum profit target, but we want to do it consistently over the 15 days. Not every day we'll be able to hit the max profit target. Stop trading, right? Realize where the best window opportunity is for your trade plan, for your structure, the style that you like to trade, and stick to that window. I think the best thing that I have learned with what I've been doing and going through this process myself is figuring out the threshold for the volatility is so key to help us understand when are the times that are most conducive to our trade strategy. What does that volatility envelope look like? And then can we, you know, re, you know, retain some discipline to apply our trading execution inside those conditions? And putting all of that together with a company like Earn2Trade is a great way to approach it. So take advantage of their offerings, and you can use JATS, JATS, 70% off right now for their subscriptions. So be sure to jump on this. All right. Thank you so much. Y'all talk to you soon. Thanks.